peak, and so is the Hang Seng.
19.8% second next only to China from 19.4% in the May review.
Two swing lows, 24,080 and 23,893. 10 points down, 24,333.
It just seems like nothing can break the market at all.
Long-term story we are very clear is highly intact for e-commerce volume growth in India. Our international business has been able to improve our profile.
Mildly lower start this Tuesday morning. The Nifty and the Sensex down close to about 0.2%.
It's a red-looking screen. We've given up most of the gains.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that was the day so far, and as you can see, the cuts in the market are getting deeper and deeper. We're at the day's low. The Nifty's breached 24,200, 175 points gone. The Sensex is down close to about 600 points. You're watching Closing Bell, and we're live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me, Surbhi and Nigel. Hi, guys.
Hi, good afternoon, folks. So I guess, we are kind of a little alone here in the red today, right? Because otherwise global markets have been holding up fairly well. There's green across European screens. Asia closed up positive. Japan had another very good day. So perhaps people will go back to asking some rumblings. Is there something residual in this whole Hindenburg issue or not? Remember, there is a PIL that's been filed in the Supreme Court. So I think the market's taking note of these things. And the question being asked is the worst of the impact over? Was it all done yesterday? Or whether this will keep flowing through the system? And I think we know that anyway at elevated levels, perhaps people are also looking for reasons to book profits where they can. And we're seeing some of that today.
Well, that's right. And I think the biggest weight on the index, both on the Nifty as well as the Nifty Bank, when that's down close to 3%, if you pull up a contribution chart, you'll see bulk of today's fall is because of that. For the Nifty Bank, well, that one's breaking down now. It's close to around 650 points down. The Nifty Financial Services Index, that as well is down close to around 1%, and that one plays out weekly expiry, so we'll keep an eye out on that front. There we have it. More than 50% of today's losses are solely because of HDFC Bank. Well, what are the support levels and how do you position yourself in the final hour of trade? Mitesh Thakkar joins us to help us out with that. Hi Mitesh, good afternoon. What do you make of today's trading session, and do you think we're going to be going ahead and testing the recent lows of around 23,900 odd?
Good afternoon, Nigel. So I think, I've been mentioning that this will be a sell-on rallies market, and it's kind of played out like that for the time being. But there is some pivot support at 24,100 and then 24,000. I think you might see some more choppiness, but eventually I think it looks like a stronger possibility that we'll head lower and maybe, retest those 23,900 lows and maybe make a fresh low below that. So in that sense, the market view isn't very positive. The only good thing which can happen is that, some volatility and the market kind of becomes range bound until the indicators cool off. For the time being, it looks like a negative market, and on higher side, you will see a lot of supply emerge. So therefore, we'll maintain some negative stance, and I have sell calls on the stocks right now. Bajaj Finance is a sell with a stop at 65.40 for targets of around 6,400. And while Balrampur Chini is doing good, I would still, want to go with another stock, which is Berger Paints. So Berger Paints is a buy with a stop at about 527 for targets of 551.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on the number that just came out. That was Hindalco. And if you look at the intraday chart, well, the stock has recovered a goodish bit from the low point of the day because the India part of the business have reported, and it's a rather good set of numbers. Running you through the basic standalone numbers first, the revenues are up by close to 11%. You have the EBITDA number that's up by close to around 76%. The crucial number in here is the power and fuel cost. That's declined by 13%, telling you that they are getting the benefit of lower, coal cost, and also e-auction prices have come in lower. So that's the crucial read-through when you look at the standalone numbers. And power and fuel cost as a percentage of sales, it's come down to around 10% from around 12% odd. But the more important part of these numbers are the segmental breakup. And on both the parameters, it's a beat out there. So I'm looking at the aluminium business. Well, they have delivered numbers of around 3,600 crores. I was looking at most brokerage estimates. They were in that vicinity of around 3,300 crores. So on elevated expectations, well, they've even gone ahead and beat that. And on a per ton basis, the aluminium EBITDA per ton is around $1,270 per ton. That's up 80% on a year-on-year basis, and even on a sequential basis, it compares with a number of south of $1,000 per ton. So aluminium has done very, very well. The only problem is that in Q2, aluminium prices are sharply lower. So this EBITDA that they have delivered, well, in all probability, it will decline quite a bit from these levels. The copper business, that's the smaller part of their business. Out there as well, we were working with a number of around 615 crores. I remember just a few, maybe around 6 to 8 quarters ago, this number used to be around 300, 350 crores odd. But they've been focusing on value-added products out here. And that number has now moved to around 800 crores. We'll have to see whether or not there was any kind of one-off in these numbers. But the smaller part of their business as well has delivered. The net debt number has gone up marginally. We already had Novelis's numbers with us. And out there, we did see that the working capital got expanded a little bit. Put everything together, the India part of the business has delivered, which explains why the stock has recovered from the low point of the day. You have a beat, 10% beat on the aluminum business and on the copper business as well, clocking 800 crores per quarter. That's a very, very strong set of numbers coming from Hindalco. As I said, the problem is that base metal prices have corrected post Q1. Hemang Jani joins us to help us out with a quick analysis. Well, Hemang, I ran through the basic numbers and a quick analysis on that. But fundamentally, how do you think the stock is placed? And at around 620 rupees, what would you do?
Thank you. Good afternoon. For the quarter, it's an all-time high quarter. Even the aluminum EBITDA looks quite decent, and there is a slight beat over there. Along with that, in line with slightly better outlook for Novelis and a possibility of a rate cut in US, I think that makes a good case for some sort of upside for Hindalco. And the stock has corrected almost about 10 to 12% from the top. So I think post the numbers, there is a case for some sort of a rebound. However, the large will depend on how the commodity prices behave, what sort of data point do we get from US. But at least from a short technical point of view, this looks like a positive set of numbers.
Okay, so that's Hindalco, no problems there. And the numbers along expected lines, as Nigel has explained. The market, by the way, continues to reel under pressure. Look at the Nifty again, almost a 200-point dip coming through. The mid-cap index is a shade better, but it's really the bank Nifty that's been hurtling lower. So that there you see every bounce is getting sold into. So that's the nature of the market. It changed to basically selling the bounces somewhere around 12 o'clock onwards. Let's actually address HDFC Bank. The stock's been down about 3%, and we've been talking about this, the negative impact playing out, because this weight increase in the MSCI indices is not happening in one go. It's going to happen in two different tranches now. First one is August. The second one is going to be in November. And we caught up with the analysts. The expectations on the street range between 1.8 to about $2 billion perhaps will come in the first tranche itself. But what we're seeing is obviously disappointment that all the money, which is up to $3 billion, is not coming in one shot. Hemang, what would you say? I mean, HDFC Bank has been a drag for a long time. I remember even when the that FBI headroom increase news came in, it was coupled with, I think, the business update, which was a little lackluster. So even then, the stock didn't take off as one would have expected it to. What's your sense, and how are you approaching this?
If you look at last 1 year, there will be at least 3 to 4 occasions where either because of MSCI related flows or some technical adjustment, there will be certain hype that gets created before the announcement of the news. And on the day of the news, the stock typically sells off. So I think it will be very difficult to gauge how it's going to behave because of this, because there is a lot of hype and expectations ahead of the event per se. Having said that, I think the numbers that they delivered were pretty decent. And now that a large part of their HDFC related loan liability is cleared, I think from next quarter onwards you will see a decent improvement in the margins, and I think overall loan growth also be reasonably good at about 12-14%. So I think from a medium to long term perspective, this looks like a good bet, but short term, because of the high weight in the index and the way things are, maybe it may underperform.
Inox Wind, a stock which has given a 300% plus return in the last 1 year. Results have been strong. Anyway, the company has repaid all its external debt. There was a promoter infusion. The numbers are looking good. Margins have beaten expectations. Their order book is up 3x. And this entire renewable theme continues to gain momentum and deliver this time when it comes for Inox Wind. Do you like the stock at current levels? Okay, we'll try and connect with Hemang for Inox Wind, but let's talk about Aarti Industries, because that is the biggest drag today. The stock is down close to about 15% after the management suspended the EBITDA guidance due to volatility on account of pressure from China. Sonal is joining in with the details and what brokerages have made of that commentary. Sonal.
Thank you for that. Well, Aarti Industries was one of the first chemical companies to see a sequential recovery after months of losses and pressures that we have been seeing. So Street was of the view that maybe that recovery could continue and the company will be able to meet its targets. But now after their Q1 numbers, they're not very sure whether they'll be able to meet the EBITDA guidance of 1450 to 1700 crore rupees because of a number of reasons. One, they are seeing volatility in margins. Second, there are pricing pressures coming in from China. And that is something which has disappointed the Street. Volume growth, they expect it to continue at 20 to 30% in FY25, but the overall outlook remains a little vague. In terms of their discretionary segment, the dyes and pigments, that is seeing sequential recovery. Agrochemical demand would only come back in second half of FY25, and the Red Sea issues, they continue to impact exports, so they say that some segments could be impacted because of that in FY25. Their debt stands at 3,300 crore rupees. With some of the capex, they could see it rising to around 3,500 to 3,600 crore rupees. As I said, it has come in as a surprise for brokerages as well. For instance, Morgan Stanley has an equal weight rating. They say that companies expanding into newer portfolio, the energy applications, that is something which is leading to more volatility now versus what we've seen in the past. MK says that they have a buy rating, and yes, it is the fourth consecutive quarter of sequential improvement in EBITDA, but they are still a little disappointed with the guidance, and that's why they've cut the EPS estimates by 11 and 5% for the next 2 financial years. Nuvama, they've gone ahead, they've raised the target price, but that is largely because of rollover to Q1 of FY27. They maintain a buy rating. And in terms of Kotak, they say that the company has suspended their EBITDA guidance for FY25. Overall, they have an idea of 25 to 30% CAGR growth in next few years, but that also depends on what volatility we see, what is the pricing pressure, what happens in China. So that's why they are also not very sure of whether this growth will continue going forward.
Okay, all right, Sonal, thanks very much for that. Tough day for Aarti Industries for sure, 15% lower on the back of all of those concerns that Sonal just highlighted. Let's see what other stocks stand out today. I mean, even on the mid-cap screen, you do have sharp reactions coming in. Look at something like DOMS, which is down about 6.5% after coming out with numbers. Uflex numbers didn't go down too well with the market, 9% down on Uflex as well. And even beyond earnings, I mean, today you're getting sharp knocks on a lot of stocks. For instance, Chambal Fertilizers, which is lower quite a bit. Then you have something like a car trade losing about 6 to 7% as well. So even in the mid-cap space, there is a fair amount of pressure that is coming through. However, let's talk about one side of the market where we're seeing green, and that's actually sugar. Let's see if we can actually pull up the sound bites, because we were in conversation with the management of Balrampur Chini earlier in the morning. Now, what's the buzz around sugar? Let's get the stocks up first. So whether it's Balrampur or Dhampur or Renuka, you can see most of those stocks are quoting on the green side on a day which is not very favorable for the market. Now, a couple of factors here. One, there's buzz in the market that we will see at some point in time in the near future a hike in ethanol pricing, because the government is very gung-ho on the blending program. It wants to take up blending from 15% to 20% as early as next year. And the second, there's been some buzz that blending will be extended to diesel as well. Right now, we only speak in terms of petrol blending, but diesel also will have an element of blending. So I think that put together is causing a little bit of a stir. Here out Balrampur Chini on their own performance, their expectations from the new sugar year, how pricing is faring, and also, of course, the hope that exports will be allowed by the government in the new sugar year.
Government would like to see the progress of the monsoon and the yield of the crops, maybe sometime post the commencement of the crushing season, and then they would take a call on the export front. As far as the future pricing are concerned, domestic availability of sugar is sufficient and it is balanced. So we don't see a very runaway in the domestic prices from here. Government is looking at a blending of around 20% in 25-26. Sugar industry can easily supply 50 to 55% of the total requirement, which will be required for 20% blending. And as per the Nifty Aayog document, for 20% blending, the requirement is around 1,000 crores liter. For the pricing, yes, we are still awaiting the revision of ethanol prices for the last year. But this year, as the government is looking for a meaningful diversion of sugar to happen into ethanol, I think the proper pricing will be set.
Okay, that's the word coming in from Balrampur Chini. Hemang, you want to come in on sugar stocks?
Yeah, so we've seen a good amount of rebound in some of the sugar names, be it Balrampur, even something like Praj. We have seen a good rebound, primarily because of the possibility that the ethanol relaxation could come in a bit earlier than what was earlier talked about. Also, today we had this update that there might be possibility of government considering exports, and that also led to some sort of a rebound. And more importantly, I think most of these companies, if you see for the past, let's say 1 year or so, the earning stability because of the commodity prices and all has become slightly more better, because you have ethanol and cogen both working out to the optimum capacity. So I think both Balrampur and Praj is something that we like at this point of time.
Okay. All right, let's do one thing. Let's take a break at this juncture. We'll come back with a lot more on the markets. And as we take the break, here is a quick programming reminder as well. Tomorrow at 6 p.m. on our special offering CNBC-TV18 Town Hall, we will get chatting with global investor, author and columnist Ruchir Sharma on his new book, What Went Wrong with Capitalism. Don't miss out on this one.
Welcome back. Some of the large financials are cracking now. So Bajaj Finance is down 2%. Kotak Mahindra Bank has slipped. Axis Bank has come under incremental pressure. And outside of that, in the broader markets, many of these midcaps are reacting to numbers. So FACT, where the company has reported a loss of nearly 50 crores, is down close to about 5% Easy Trip is holding up in the green after reporting a profit jump of 25%. So that's a stock up close to about 2%. DOM's numbers were fine. But, the stock has slipped off quite a bit. Pull up that intraday chart of DOMS. It started off flat, but now it's down nearly 5 to 6%. And keep your eye on Industars, because tomorrow the share buyback opens. It opens on 14th. It closes on 21st of August. The buyback size is 2,640 crore at a price of 465, and the current market price is 405. The buyback size is 2.1%. So the question for retail investors is, will you participate, tender in this buyback? Because the stock is up 100% on a year-to-date basis. But let's address the big listings of the day, and what a day one it's been for Brainbees Solution, which runs India's largest multi-channel mother and baby product retail platform, FirstCry. Very strong listing, 50% gains on that. Mangalam is now joining in with more details. Mangalam.
It's indeed a stock of the day. One of the bigger listings that we've seen in recent times, pipped only by Unicommerce, which actually doubled today on listing, but it was a near 40-50% premium to its issue price. More importantly, there were ingredients in place for a big listing. That's because demand was strong, mostly led by QIBs, 12 times oversubscription. Plus, it's a business which is fairly well known. It runs India's largest multi-channel, multi-brand retailing platform for mothers, babies, and kids products under the brand FirstCry, and also they've begun to sell products from third-party Indian brands, global brands, home brands, both online as well as offline. They have over 1,063 stores in 533 cities, and some of their brands are fairly well known, the likes of Baby Hug, Baby Oi, Cute Walk, and Pine Kids as well. And in 2022 and 2019, they also moved their business, expanded their business in UAE and Saudi Arabia, and they also have a bunch of preschools. In the previous year, that is FY24, the GMV grew by around 26%. Their revenue grew by about 15%. They operate on margins of close to 4%, but that's on a consolidated basis. The India business actually does margins of nearly 9% as well. This morning we spoke with the management, and they said the runway for growth is fairly long, because only 16% of the market is currently organized, and the organized part itself is growing upwards of 20%, in which the company intends to grow a little faster. And the India multi-channel margins, which are at 8.8%, have a fair amount of runway to improve going forward as well. At current reckoning, the stock trades at a little over 4 times price to sales and around 100 times price to EBITDA. But importantly, if they can double their margins and increase their sales by 20-25% going forward, then maybe the street would look at 1 or 2 year forward earnings and consider this stock in terms of valuation as against the trailing valuations.
Okay, let's also talk about Unicommerce, which has pipped FirstCry in terms of gains, because the stock straight away opened with a gain of more than 100%. Very strong debut. The stock price on listing was 235 versus an issue price of 108. So straight away, 117% off the back. Now, this is a company which provides back-end software to power e-commerce transaction. For instance, order management, warehouse management, trade management, etc. That's the kind of SaaS products Unicommerce provides to e-commerce companies like a Boat, a Mama Earth, and even legacy companies like Fab India. Now, the company had seen a robust subscription of 168 times, but remember, it was a much smaller IPO. In terms of financials, its FY24 revenues were 103 crore, margins were 13.9%, and profits doubled last year to 13 crore. Now, the growth of the company is linked to that of e-commerce. So if e-commerce does well, Unicommerce does well, because they get paid on per volume of transactions. So for every transaction, Unicommerce gets paid. The last 3 years, the company's growth rate was 35%. The management said that going ahead, they believe the industry, e-commerce industry, should grow at 25%. And their goal is, or at least they have historically outperformed the industry. The company also enjoys operating leverage, which basically means because it's a software company, they do not have any fixed costs. So as the company grows in size, most of the revenues flows through into the company's bottom line, and margins have scope to expand. On a steady state basis, most SaaS companies operate at 25 to 30%. Unicommerce is not there because it's a smaller company, it's not achieved the scale, and it's still not at steady state. The company is also debt-free, it's got cash in the books, which is why this company did a pure offer for sale. The money that was raised did not go into the company. No fresh issue, but very strong gains, 94% right now as we speak. Hemang is still with us. Hemang, would you buy Unicommerce or First Cry today?
So amazing listing for both the names. I think the appetite is back in the market, and I do like both the spaces, you know, whether it is Unicommerce, which is a SaaS-based platform with a interesting plug-and-play solutions. The only issue, Rima, is that, you know, for a company which has a 12-13 crore kind of a net profit is getting a market cap of about 2,500 crore. So, you know, the market is probably pricing in, you know, much more than what it should given the, you know, visibility that you see. And same is the case with First Cry. Again, you know, it's a loss-making company. It's a great positioning, the kind of format that they have, and a unique play or a retail platform. The only thing is that 35,000 market cap is way too high for these kind of companies. So maybe from a short-term perspective, because of the appetite, because of the float, you might see some action, but larger call can be taken once we have a slightly better handle on the numbers and visibility going ahead.
All right, Hemang, thank you very much. Good to have you on the show. We will leave it on that note for this morning, for this afternoon. Well, with that, let's welcome in Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you on. The market's having to deal with a lot, right? The news flow has been heavy from the election time till, you know, then we had the budget, the tax changes, and now, of course, all the murmurs around Hindenburg. What do you make of things? I mean, at these levels, earnings season is also just winding down. Do you think this market has more juice to keep running? Or are we in for maybe a period of time correction, if not price correction?
So I think the later part seems to be more correct actually now. I think time correction is something which market actually, you know, will be happy with it. The market participants will be happy actually with it, because running away market is something, you know, where a lot of participants remain at the lower level. I think now they may get an opportunity because the broader market, I think now is consolidating. You may get good opportunities. There may be some disappointments in the results because the prices moved up actually much in anticipation. Margins, I think going forward, if you look at the crude oil prices, they have not jumped up actually so much. It is still around $80, $81 per barrel. So despite the uncertainty in the global geopolitical scenario market. So I think this is good from the margin perspective going ahead. And from the earnings perspective, I think from the index, you will not see much of a disappointment. Still the 12-16% of CAGR earnings growth will continue. And that is where I think the declines in the market, you know, should be bought into. I think that's very clear. And post-budget, we had seen a decline towards 21,000. If you see financial year 25 EPS, of average EPS around 1140, the price to earning at 21,000 comes around 18 times, and the 5-year average used to be 18.5. That means we came closer to the 5-year average. And then we saw the FII money also coming in. It's very interesting. The 2021 onwards, we are seeing this pattern that FIIs generally who have not invested at elevated levels, they just invest when the market declines. So they are not leaving India. They are just waiting for attractive levels. And that's why at 21,000 again, in the month of June, you had positive figures from FIIs. So my sense is from the index perspective, it is more consolidation possible. You have to choose now your stocks where you see a good growth. Yes, some tactical shift towards some consumer names, ruler-specific names, possibly technology, possibly some textile stocks is possible, which have not participated much in the last 2 years.
So would you recommend this tactical shift towards consumption, rural, technology, textile names? Which one would you give preference to?
Yeah, I think why not? I mean, when we have made good money, you know, in the core philosophy of manufacturing, infrastructure, energy transition, and also CapEx, why should not we, you know, move 10-15% of weight into these sectors? And that is what we are doing actually. We have bought into some technology and some pharma names also, and we are very positive on it. For example, you take the case of Aurobindo Pharma. It has been in our portfolio for actually some time, and we have added positions actually there. It is a stock which is available at a much cheaper valuation in terms of its peers, and the growth visibility going forward is very high because we have seen that the penicillin G, which India used to import from China, almost 15,000 ton penicillin G is required. And this company is going to commission actually this one now. And then going forward, you will have biosimilar as an opportunity, right? And you have the cancer drug as an opportunity. So there are many things lined up actually for them. In fact, if you see the drug shortage in US, I think in December only we heard around 300 drug shortage. Now it has gone to 325. This number can increase to 340, 350 also in the coming months. And that can lead to some recovery in some of these pharma names, because out of this shortage, 65% is in injectables, which is coming from these type of companies. So I think this can be a good growth. So different themes work at a different time. And I think this is what in the coming 5-6 months, when we will be more globally driven, because you have US president election, then you have interest rate decision to be taken. I think you will see these kind of sectors also possibly performing.
Okay, all right. I'm just hold that thought. I just want to address a couple of stocks, and the Sarda Energy stock actually has moved to the high point of the day. We're waiting for a comment on the SKS power asset. That's the one that they were looking at. It was stuck in NCLT. For the time being, the street is reading some kind of positive development on that front. So we'll wait for confirmation on that. But the SKS asset was likely to bring in substantial amount of power into their business. So that's why that one's perked up. And another one in the last few minutes, our order win was Vascon. So that one as well did move up close to around 3.5% from the low point of the day. Amit, in the past, we have discussed the metals pack, and select stocks. I think Hindalco and Tata Steel, at some point of time, they were part of your portfolio. What's the view currently on metals?
So see, in metals, broadly the view was that the downside seems to be limited because the metal prices actually were not going higher this time. They were subdued. The steel prices used to be 55,000 rupees per ton. Then this year it was 52,000 rupees per ton. So this was a different time than the previous scenario, because it is more volume driven, more domestically oriented also. But then the hiccups always remain. For example, in China, we saw the GDP growth did not come up despite the interest rate cut situation. And that is where I think there was some dumping of metal actually in India. But I think more was protected because of the duty structure. But overall, I think the global growth is also something which will drive this sector going forward. We have to see this after the interest rate cut. Possibly some reversal can happen. And also, I think the current prices looks very attractive to us. Yes, it's a matter of time when some kind of recovery along with the global can happen. I think the companies which are working on efficiency, for example, Jindal Steel and Power, in this space, if you see, they are getting some captive mines going forward. The raw material cost will get better. The EBITDA can increase. And obviously, the EBITDA per ton is one of the best actually in the industry right now for this company. So it's in a recovery phase from that perspective, and I think it can pick up. So yes, you are right. We had to trim down some of the positions, but at a certain stage, we will add on the positions also whenever we see the global growth also is also, coming up going forward.
This move into pharma is just a tactical play for you short term, because the numbers have been fairly strong in Q1 and even in the prior quarters. Or is pharma a long-term play for you? And have you upped your exposure?
Yeah, sure. So I think technology may be a tactical move more rather than pharma, because there is a clear demand of, there is a clear shortage actually in the US market for the drugs. And the certain companies actually, they are just moving into the right segment. So that's why I think the pharma story has already been played out in the market, but there is still room for this story to play out further. Yes, from the tactical shift point of view, I think technology, you can say, is more aligned going forward with the interest rate cut decision, because if it happens, then obviously I think there may be some reversal in the technology space also, where results have not been too weak this time. What market was expecting, there is some volume growth also which has come up, but yes, not the same level of growth, and artificial intelligence still remains as one of the key dragger actually, because they are just coming out of this. They have to understand the business cases for which the softwares are made. So far, you were just catering to BFSI and you were aware of how the debit, credit and how the process flow happens. So you were ready with your software buildup, but now you have to work on your business requirement first, and then you have to work on your software. So it's a challenge. And the companies are coming out with. We saw that TCS came out with one Wisdom Next as the generative AI tool, actually integration of 3-4 generative AI things. I think those kind of things you will hear, and the success rate of that will drive the companies also, along with the interest rate cut, which is more a tactical move.
Okay, so that's as far as pharma is concerned. The market's still looking at the same level, basically 190 odd points on the Nifty. Not much has changed. So sort of talking about trends, Amit, I mean, going forward, we've got a lot of new IPOs, right? New paper hitting the market and very different kind of businesses. There's, of course, Ola, that's done very well. Today's two listings have done very well as well. Just give us a sense and a flavor. I mean, what kind of companies have found your interest in, what's captivating your attention? And something as specific as Ola, I mean, are you surprised with the moves, or do you think it's really a good play and there's still something left on the table for investors?
See, I think the valuations definitely is something where you need to be a little careful. But overall, the trend towards the electric vehicles is actually gaining, is increasing continuously now, particularly in the two-wheeler vehicles, where Ola Electric has presence. And we have seen its market share almost going to 35%. But the profit making has to come up, right? That's, again, very important feature, which we used to see in the other new age technology stocks before. That did not happen actually for a long period. So I think that is something where they have to work. In fact, the subsidy from the government also, which used to be there, it was reduced to some extent last year, and then we saw the decline in the sales also. So those kind of things you have to work upon. But yes, the trend is very clear. I think in the coming years, you will see 70-80% of two-wheelers being converted into electric vehicles. And that is where it's a good growth. I think the next trend, going forward in the listing space also is going to be from those companies which are already there, for example, in thermal space or hydropower, and their renewable energy entity is going to be listed. For example, NTPC. So NTPC, if you see going forward, the NTPC renewable is going to be listed. So NTPC already has 76 gigawatt of total capacity, and they have a target of 130 gigawatt by 2032, out of which 60 gigawatt of renewable they are talking about. The current capacity of 3.5 gigawatt in the renewable space, will be 16 gigawatt by financial year 27 ending. So they are working on both the fronts. And I think that is where this company will see a lot of inflows going forward. It has already been one of the rock solid stock in the market. But yes, I think this is a trend that we are looking at. Some of these renewable setups in these companies, even NHPC going forward, those are going to be listed.
Okay, Amit, thanks a lot for joining in and giving us your views on the markets, as well as a lot of sectors and themes that we did discuss. Talking about renewables and renewable energy on the whole, pull up Suzlon. The stock had dipped into the red, but now it's done a U-turn. It's back up into the green. So it's been all over the place today. It opened up much higher. Then it slipped, I think, close to around 3-4%. And now, in fact, it's making a comeback as well. Well, time to slip into a short break. On the other side, as always, we'll get you some technical calls. We'll also try to get you an insight into dealing room action. Stay with us. Welcome back. Well, let's get straight to our favorite segment, D Street Chatter. Nimesh joins us to fill us in with what's going on in the daily rooms. Well, Nimesh, a bit of a down day, but primarily because of the big boy, HDFC Bank.
Largely, yes, Nigel. It's the large caps which is dragging the markets down. But the bigger problem is, I said this yesterday as well, that there is selling pressure from larger FIs. So, for the second day running, I understand there is a very large sell basket at leading FI desk. It was the case yesterday as well across Nifty names, and that seems to be the case today as well. From a sector point of view, the big sector of the day is clearly chemicals on the downside. Big drawdowns in the chemical names today on the back of that Aarti, putting out a bit of a muted guidance, and that led to a bit of selling pressure or maybe profit booking in most of the chemical stocks today. But that's generally the case for a lot of the PSU names as well, that there is a bit of profit booking now across the PSU basket as well. I guess from a technical point of view, while at the current levels of 24,150 is a crucial support, but on the way down, the next big support level will be 23,500. So that's the level from a technical point of view. But I guess the last 2 days of underperformance in the market is dragged by the fact that there is selling pressure from larger FIs in the Nifty names.
And what have you picked up on individual stocks, Nimesh?
Well, so the first name is Sundaram Fasteners. The stock has recovered from the day's low. There is a block in the morning trade, in the pre-open. Nearly 1.5% equity got changed hands. I understand the promoter entity was a seller and a leading long-only fund was a buyer. So, again, disclosures could be quite interesting in Sundaram Fasteners. The second stock is Strides Pharma. In a weak market, that is relatively outperforming, up 4% last I checked. Good volumes as well. Largely, this outperformance is on back of delivery-based buying at a leading FI desk. So, looks like some FI interest is back in this particular name. The third, a couple of metal stocks, both Hindalco and Tata Steel, both are under pressure, but largely because there are price limit sell orders at a leading FI desk. So, it's again part of the big basket, which includes these metal names as well. And the last is AB Capital. The stock has relatively underperformed since the Q1 earnings. It was pretty much on muted lines, but now the Street is anticipating a large block deal as well. So a bit of depth has been talked about, and the Street is anticipating a large block in AB Capital soon.
Thank you very much for that. Vodafone Idea is under pressure for the second day in a row. They reported numbers yesterday. The losses come down on a quarter-on-quarter basis. The loss is the lowest in the last 5 quarters because remember the company has repaid some of its debt after that FPO. They raised that money, but operationally the company still is struggling a bit. Revenues declined for the 3rd consecutive quarter, underperforming peers, and even on an aggregate basis, subscriber losses continue. So Vodafone Idea down for the second day in a row, today down 3%. Mitesh is back with us for a few BTST calls. Mitesh.
So SBI card is something which I'm negative upon. I think that's one which is turning weak, and PFC. So both are STVT calls actually. PFC I would recommend selling with a stop at 488 for targets of 472. And SBI cards, if I was to give you the levels, stop at about 697.5 and a target of around 680.
Thank you very much for that. Let's get to the big earnings which we're anticipating in the evening today. Starting off with Hero MotoCorp. Sudarshan now joins in with the expectation. Sudarshan.
So Hero MotoCorp will be reporting its Q1 earnings today, and our polls suggest the results are expected to be very strong, with headline numbers are seen at multi-year highs. But before I talk about the numbers, let's talk about some of the internals. It's the cheapest stock amongst all the two-wheeler names. 1 year forward P is 22 times and is slightly higher than 5-year average of 18 times. And in 2024, so far the stock has been up almost 28%, and it's 10% away from the record high that it hit in June. Now talking about the numbers, net profit is seen rising 28% to more than rupees 1200 crore. Revenue is seen increasing 21%. EBITDA may rise 31%, and margin is seen rising 100 bips to almost 15% against 14% in the same quarter last year. So what all will aid the numbers? First, healthy volumes. Q1 volumes are up 14% YOY to more than 15 lakh units, led by rural recovery and new product launches. Second, rich product mix and rise in average selling price. Company has seen rise in average selling price in the range of 6 to 7%, and product mix has recently seen an improvement that is likely to aid the margin. But there are some of the few concerns. First, company has been losing market share in its stronghold segment, that is 100 to 110 cc. Second, despite several launches, market share for the company has been low in the premium segment. And last is Honda dethroned Hero from number 1 position in total dispatches in Q1. But it seems any impact related to these concerns will be offset by the positives that company has seen in the recent past, and that's the reason we are expecting a strong set of earnings from Hero MotoCorp.
Thanks a lot for that, Sudarshan. Well, let's also get a preview on Apollo Hospital. Sonal joins us to run us through what we're expecting. Sonal?
Thank you for that. Expecting good set of numbers from Apollo Hospitals, led by the hospital segment itself. It's expected to see a revenue growth of 15% on a YY basis, EBITDA growth of 33%, margins to expand to levels of 13.3%, which would be an increase of 200 basis points, and profits to come at 274 crore rupees as well. As I said, this will be led by the hospitals business, so there is an expectation that 7 to 8% rise will be seen in average revenue per occupied bed. Expecting improvement in margins due to hospital segment, and for the hospital segment, the street is expecting a top line growth of around 12 to 14% with a margin growth of around 10 to 12 basis points on a YOY basis. Apollo Healthco, that is one where sales estimate is estimated to grow around 15% plus, and this will be driven by pharmacy distribution sales and traction in 24/7. That is where costs are expected to be flattish on a quarter-on-quarter basis and lower on a YOY basis. So that is something which will drive margins as well. Apollo Healthco EBITDA is estimated to be marginally positive. It is estimated between 20 to 25 crore rupees. So expecting a good growth in Apollo Hospitals this time, and that's why the stock is on our radar today.
Thank you very much for that. IRCTC's Q1 numbers up for you on your screen. The company's revenues have gone up by nearly 12% on a year-on-year basis. Profit jump is close to about 32%. But I think there was some news about, when people are booking on the, website, it's not going through. So numbers look fine, but I think IRCTC could be under pressure on account of different reasons. The profit this time at 307 crore is higher than the Q4 profit of 285 crores. So jump quarter on quarter and on a year-on-year basis. But let's move on because the MSCI has announced changes as a part of its August review, with changes set to be made effective 30th of August. Vivek is here to tell us more. Vivek.
Well, that's right. So much anticipated, much awaited, and in many cases also priced in, given the fact that a lot of quant analysts already had the expectation penciled in, and a lot of the stocks had already seen quite a bit of an up move in the run-up to the actual outcome as far as the index review was concerned. What actually happens as part of this particular review? India's weightage in the MSCI EM index goes up to almost 19.8%, second only to China. India will get inflows of close to $2.5 billion, a little over $2.5 billion, and all of these flows will happen on the trading session of August 30th. Now, the main index, the one that we track closely, is the MSCI Global Standard Index. 7 additions and 1 deletion over here, and the flows that we are mentioning are the IIFL Alt estimates. Zydus Life seeing flows of close to $218 million, Prestige Estates, Dixon Tech, OFSS, Oil India, Vodafone Idea, and RVNL are the stocks that make the cut this time around. One stock that will be deleted from the index is Bandhan Bank, expected to see outflows of almost $110 million. The most important stock, one that the street was watching very closely, was HDFC Bank. HDFC Bank, remember, after it had uploaded the shareholding pattern, there was enough foreign headroom for MSCI to go ahead and increase the weightage. The street was anticipating that this weight increase that would have led to likely inflows of close to $450 million the MSCI has now decided to implement this weight increase in 2 separate tranches rather than one that the street was anticipating. That explains the stock down move today, but even after that, HDFC Bank will receive inflows of close to $1.4 billion on August 30th as part of the first weight increase. The second weight increase will most likely happen in the November review in case there is enough headroom over there. And lastly, the MSCI has lifted the embargo as far as the Adani Group stocks are concerned, indicating that Adani Group stocks will now be treated at par with all of the other MSCI stocks.
Thank you very much for that. We'll slip into a very short break. We'll come back with more on the market. Stay tuned. Welcome back. Slipped another 20 points. Now Nifty's down 200 plus points, 24,130. Remember, from 2:30 onwards, the markets were hovering around 24,150. But now in the last leg, last few minutes, the selling pressure has extended itself. The Nifty Bank cut stands at 750 points. And names like RateGain, Metro come under pressure for the second day in a row. Let's get you some market opinion before we catch up with Sudeep Bandyopadhyay. Earlier today, we chatted with Rahul Arora of Nirmal Bang Equity, who shared his view on the Nifty bull run, the BFSI sector, and the ongoing consolidation in cement.
At an aggregate level, I'd still say if you were to look at the Nifty earnings projections for the next 2 years in terms of growth, because I think most of the margin expansion is done, Prashant. The focus is now going to be on the top line. So you're probably going to be looking at about a 13-15% kind of earnings growth for the Nifty between 24 reported and 26 actual. I think that should be your expectation for the market return as well. I think people should not lose sight of the fact that the Nifty was 7,500 not too long back, and it's more than tripled in a matter of 4 years. So I think at some level it's going to rationalize. But I think overall BFSI is still presenting value. I think housing finance companies could be interesting. LIC Housing Finance was a miss this quarter in terms of results, but we like that space. We recently initiated on Housing Urban Development Company, Hindalco. We like that name. So I think BFSI valuations are not demanding at all. IndusInd Bank again coming to you at 1.5 times, Axis at 2. It's a clear overweight sector for us. Consolidation is going to be the name of the game. I think if you look at ACC Ambuja combined, which is eventually the reality, it's going to happen at some stage. I think that looks like an interesting bet from the large cap space. Okay. I think if you look at the mid cap space, we like Aramco. I think there is still at least another 20% game that's probably left there. And JK Lakshmi from the small cap.
All right, that was a view from Nirmal Bang that we got earlier. Sudeep Bandyopadhyay is joining in from IndiTrade Capital. Sudeep, good to have you on. You know, I remember our conversation on Sunday when we were discussing the fallout of this Hindenburg latest report. And I know that, I mean, a lot of people from the market, including the legal fraternity, they've said that it shouldn't be too much of an issue. But I don't know, I mean, looking at the selling today, do you think there is some sort of a residual impact that is still playing out? What would you attribute today's fall to?
No, Survi, I don't think this has got anything to do with Hindenburg report. I think, this is a little bit of nervousness at elevated levels, and that's what is happening. I think, market had to find some reason to correct. We have been going up relentlessly, and at some point of time, little bit of course correction, little bit of profit booking, consolidation, whatever name we wish to call it, was par for the course, and that's pretty much what is happening. I don't think we should be too perturbed with this. A bit of consolidation at elevated levels is warranted, and that's it happening. We've been saying this time correction is required. The valuations in many sectors and many corporates had reached levels which were not really sustainable based on the earnings. So a bit of catching up should happen, and probably we're seeing the beginning of that. I'm not saying markets will continue to correct. There is enough and more liquidity, which is ensuring that the market remains at elevated levels. Look at the IPOs which are coming. They are getting subscribed post-listing. They are also performing very well. Though the valuation-wise, some of them are looking stretched even now after listing, immediately after listing rather. So we have to be a little careful. We have to be a little stock specific, but the bias is positive, and we will continue to inch upwards with a lot of volatility.
Sudeep, many of the PSUs, despite decent numbers, have come in for selling pressure post the results. So even Hindalco today or IRFC, RVNL was a disappointing set of numbers last week. But even where the numbers were not so bad, they were actually pretty good. You've seen the stock selling. What's the view now towards some of these high-flying PSU stocks? Would you book profits?
Well, Anima, if you're talking about high-flying PSUs in the defense or railways, I think they were, valued to the perfection or even more than perfect, and some amount of correction was warranted. Some of them came with not so good set of numbers, and they corrected very, very sharply. And I think that's the right thing to have happened. Order inflow and valuation cannot be equated. And that's what was happening. With every fresh order inflow, the valuation was moving up. I think there is a huge difference between getting an order and executing it in a profitable and time-bound manner. The market will mature, and we are learning that very fast. As far as overall PSU space is concerned, we like the power space, I think there is a lot of positive things happening in that space, and the valuation there, in spite of it going up, still looking attractive. And NTPC, even at current level, does look attractive. Some of the power financiers, some of the ancillary companies, transformer companies, they all look good, provided you have a 1 year plus time horizon.
All right. Hi, Sudeep. Good afternoon. Sudeep, you mentioned briefly about IPOs. What's your view on Ola Electric? A lot of doubts were there. I recall in the first minute, the stock opened as flat as can be, but that was the only time. After that, it just accelerated. Next 2 sessions, 20% up. Today, it was up 15%. It's come off the top. What's the view on the stock?
Well, Nigel, one thing has happened definitely. Unlike the couple of years back when a lot of IPOs came, new generation IPOs came, everybody is talking about either profitability or path to profitability. Even Ola is talking about path to profitability. They're talking about the huge battery factory they're putting up and how that will change the game, improve the margin and things like that. So I think the noise being made is absolutely right and market likes it. But having said that, I think it's still not proven, and we'll have to wait and watch how things pan out from here. I won't be surprised if at some point of time we do see a lot of correction coming in Ola Electric. Not saying the company is bad, not saying the business is bad, but it's something which has to run its course. It's a long way to go before we can call it a successful company.
Okay, all right, Sudeep, we'll leave it on that note for today. Shorter conversation, but we will see you after the market close. Let's start recapping what's been a choppy day of trade, but one where the bias was very, very clearly negative. There's no taking away from that. And you have financials to blame for it. There's been weakness on the PSU side of the market, and metal stocks haven't had too much of a great showing today. And we're ending practically at the lowest point of the day, so that's never a very reassuring sign. Anyway, let's talk about the Nifty then and where the pressure came in from. BPCL is one stock that's down about 3.5%. Then the financials, as I've been saying, HDFC Bank, we've discussed it in great detail, but Shriram Finance, Bajaj Finance, quite a few of these other names, HDFC Life. So financials across the board, not just banking, not just this one stock. There was weakness all around. State Bank of India as well on the way down. Some of the auto stocks have seen profit taking. Case in point would be a Hero Moto, which has been down. Then I spoke about metals being weak, so Tata Steel was another name on the way down, and Hindalco, despite the numbers looking in line, as Nigel pointed out, stocks ending lower, about 1.5% on the low side. Very clear move to defensives in today's action. Titan, Apollo Hospitals, Dr. Reddy's, Tata Consumer, Britannia, Nestle, you get the drift. Basically, a rush to safety is what we saw today.
And Titan has been an underperformer. Year to date, Titan is down 8%. So today, some buying has gone over there. And Apollo Hospitals, remember, reports numbers. The street is expecting a pretty good quarter, 15% top line growth, some margin expansion. So Apollo Hospitals was one of the big movers. Outside of the index, the Midcap index was down 0.8%, negative advanced decline ratio, one stock gaining for 3 in the red. Top losers include an Aarti Industries. In fact, it took down some of the other chemical names like Naveen Fluorine also. So Aarti Industries was down close to about 15% Other than that, you had cuts coming through in a MapMy India, a Rate Gain, a Metro Brands. These were stocks which were under pressure. Indus Stars was down nearly 3%. On the way up, Senco deserves mention, Inox Wind, but not to forget, right, the two big listings of the day, FirstCry and Unicommerce.
Well, blockbuster listings, and I think it's 3 out of 3 in the last 5 sessions or so. The IPOs have listed in style. A few more names that did well from the broader markets. Sarda Energy, well, the street is hoping that SKS Power asset that was currently at the NCLT, they get the go-ahead out there because there were numerous bidders. So we wait by for confirmation on that, but the stock ended at the high point of the day with a gain of around 7.5%. Stovecraft as well, up 7.7%, one of the underperformers that have done well, positive commentary, and Inox Wind as well, another one that's been rock solid. For the time being though, we'll wrap up on this edition of Closing Bell. You stay with us. Markets Forward comes up next.